Silver Stacker here. We are live, and I've got some bad news for you, folks. Some really bad news, actually. It was looking like maybe U.S. economy would be able to catch a break. Maybe the Fed would be able to get inflation under control. Maybe the trend of de-dollarization, the BRICS nations joining together to undermine U.S. dollar hegemony was not going to be that big of a problem. But now we have a very reliable contrarian indicator that is telling us everything is not going to be well. And I'm not going to keep you in suspense, but really this is one that should scare the pants off of you. And what I'm talking about is Janet Yellen is feeling very good about the U.S. economy. Yeah, this is not a good sign, folks. This is an indication that we should all be very, very worried about the U.S. economy because Janet Yellen, she's as insider as they get. Former chair of the Federal Reserve, current secretary of the Treasury for the Biden administration. And I can only assume that what she's doing here is just pulling some damage control, trying to get the masses not to panic before everything falls apart, trying to maintain order until it's too late. If you want to get an idea of what kind of a contrarian indicator Janet Yellen is, just go back to 2017 when she was telling us that she expected no new financial crises in our lifetimes. Yeah, so that one didn't age too well. We've had several financial crises since this forecast was made, and that is why when she tells us that she's feeling very good about a soft landing for the U.S. economy, we should be really worried. So in today's video, I'm going to kind of go through some of the points she made in this interview. It was an interview she was giving as she flew back from the G20 meeting, and I just want to go through and examine some of the points she made and explain why we really should be very concerned about the things that she seems to be very nonchalant about. And before we do that, quick word from today's video sponsor, sdbullion.com. Make sure you check them out with the link down in the description. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. It's where I buy my gold and silver, so make sure you visit them. Support the sponsors. It helps support the channel. Thank you for that, everybody. I do see some folks chiming in the chat here. Hello, welcome. Please do give the live stream a big thumbs up if you can. It helps support the channel. It means a lot to me. If you haven't subscribed yet, consider doing that. Got some folks saying they like the later times for the live streams. Yeah, well, I'll try to do more of those then if that is what you like. So Yellen tells us that she's increasingly confident that the U.S. will be able to contain inflation without major damage to the job market. She hailed data that shows a steady slowdown in inflation and a fresh influx of job seekers. She says, quote, "I am feeling very good about that prediction. I think you'd have to say we're on a path that looks exactly like that," referring to her previous hopes that the U.S. would avoid a recession while still reining in consumer price gains. And we've got Adrian saying, sorry, I don't follow American politics. I don't even listen to Canadian politicians. Yeah, well, Yellen is a central banker first and foremost. She is a politician too. I mean, those two things kind of go hand in hand. Supposedly the Fed, an apolitical entity, but I think we all know that's a bunch of BS. So she said that she doesn't think we need to worry about China's expansion of the BRICS organization. She mentions that. And she also says here, every measure of inflation is on the road down, which is very interesting. We're going to address that in just a moment. Because, I mean, that is pretty much a bold-faced lie. But we'll get into that. Don't worry. Hey, Scott. I see Scott Sim saying, hey, SSS. He's always leaving great comments on these videos. Appreciate you watching, Scott. Hello, sir. Welcome. And welcome to all of my regular viewers and also anybody new who's just tuning in. Jeff Tooley Tiger Thomas, channel member. Welcome, sir. All right. So she says that the job market is strong, that they're going to be able to get inflation down to the 2% target. The BRICS expansion is no big deal. First of all, let's just take a look at the price of crude oil. Today, up another $1.49, up to the highest level on this year-to-date chart you can see of 2023. This is going to put a bit of it's going to be difficult for that inflation narrative. She says that all of the measures of inflation are ticking down. It's not exactly true. The June CPI was 3%. I think that's going to be a bottom now. Headline CPI. The data for July was 3.2%. This is the Federal Reserve of Cleveland's inflation nowcast. We're going to get this data tomorrow, so we'll see what the real numbers are. But they're expecting that for August, the year-over-year increase in the CPI is 3.82. So I don't know what inflation measures Yellen is looking at, but headline CPI, the one that actually is what consumers experience, the one includes food and energy. So if you are a human that likes to use energy and consume nutrition, that's probably the headline CPI. That's the metric you want to look at. And that is going to be moving up, at least the Fed tells us their forecast, from 3.2% year over year to 3.82%. And then they think in September it's going to move up even more. And who knows, this may get adjusted. These are just forecasts. Tomorrow, we'll get the real inflation data. Well, real inflation data, the official inflation data. Let's say that. I don't want to say that the CPI is a real measure of inflation because it's not. Drastically understates inflation. Kind of the way that Yellen is understating the risks to the U.S. economy here. But yeah, she tells us that inflation metrics are moving down. They're not. In fact, I think that they've bottomed. We got Goldman Sachs telling us that oil could hit $107 by year end due to the production cuts by Saudi Arabia and Russia. How is inflation going to go down if the price of oil is spiking up to the highest level of the year and likely going to move up much higher? That's according to Goldman Sachs. So I'm not saying that they're the most honest folks around, but it's pretty clear that when the supply of oil is diminished, the price is going to go up, barring some kind of a massive economic recession. Now, that may be what we get. That's probably the only way we're going to get these inflation numbers under control, especially while the Fed is running some of the biggest deficits in history. I think that the only time we've run bigger deficits than right now was in the midst of the pandemic. And right now, supposedly, this is the greatest economy in the history of the planet, right? We're not in the midst of a crisis. So why are the deficits so high? It's a good question. But the other thing, that Yellen kind of downplays here is the risks posed by, excuse me, by the expansion of the BRICS organization by China. And, if that's not a problem, if the expansion of BRICS, led by China primarily, in their attempt to de-dollarize the global economy, is not a risk, and they're not worried about the petrodollar, they're not worried about the Chinese yuan supplanting the US dollar, why is it that in the Saudi Arabia-Israel-US deal that the Biden administration is pushing, why is it that they are pressuring Saudi Arabia to continue selling their oil in dollars and not in Chinese yuan? If it's not a risk, if you want to downplay it and say it's not a big deal, then why is it that we are offering nuclear reactors in a Palestinian state to Saudi Arabia as long as they promise not to sell their oil in yuan? Answer me that. This is a piece just on a blog here, geopoliticaleconomy.com, but they're referencing a piece that was run in the Wall Street Journal a little over a month ago. And according to this, citing the Wall Street Journal, in terms of Saudi-Chinese relations, Washington has three main demands. One, assurances that Riyadh will use U.S. dollars, not Chinese currency, to price oil sales. Two, assurances from Saudi Arabia that won't allow China to build military bases in the kingdom. And three, limitations on Saudi Arabia using technology developed by China's Huawei. So why is it, if this is not a threat, why are we pushing them here? Why are we dangling the carrot of nuclear power? We got someone in the chat there saying it's going to be a soft landing right into an active volcano. Sorry, difficult name to pronounce there. But yeah, that's a funny, that's a point. Yeah, we might be landing somewhere, but it's not going to be anywhere that we want to be. And, in addition to that, that whole deal might not even go through. There's no guarantee that Saudi Arabia is going to sign on to that deal. They're going to be joining the BRICS organization in January, and China is making their own counteroffers. According to Reuters here, you got Saudi Arabia considering a Chinese bid for a nuclear plant, according to the Wall Street Journal. So, if it's not a risk, we're offering them nuclear technology, and they might not even take it. So it's amazing to me that Janet Yellen doesn't understand the risks that this posed. It wasn't too long ago that Congress was telling Janet Yellen to put a plan in place at the U.S. Treasury for in case China decides to liquidate their nearly a billion, or I'm sorry, yeah, $1 trillion, not a billion. What's a billion anymore, right? No, $1 trillion worth of U.S. treasuries. So when you add up the Chinese holdings with the Hong Kong holdings, it's about $1 trillion. If they decide to liquidate that, that's going to be a major crisis in the market to the tune of something like $300 billion a month. So if the Chinese decide to dump their $1 trillion worth of holdings, that's going to throw a bit of a monkey wrench into those plans. So why is it that Janet Yellen is not concerned about this? Well, I think it's very likely because she's just playing damage control. Not only that, I mean, this conflict in the geopolitical realm between the U.S. and China, and also, global economic confrontation, it's continuing to deepen. At the G20 meeting recently that Xi Jinping shunned. He sent, I think, his second in command or finance minister or somebody, some proxy. He didn't even take that meeting very seriously. Biden, along with India and Saudi Arabia and a few other G20 allies, quote unquote allies of the U.S., they've unveiled this infrastructure project. Now, as far as I know, nothing here has really been finalized, but clearly this is a bid by the Biden administration. His quote was, "This is a big deal," said Biden. "This is a really big deal," according to AP News. This is a bid to counter the Belt and Road Initiative, the program that China has set up to build all of this infrastructure throughout Africa and the Middle East. Well, Biden's a little bit too late to this game. And my big question is, how are they going to fund this thing? I mean, the BRI is a multi-trillion-dollar enterprise on the part of China. And in case you hadn't noticed, the U.S. doesn't have a lot of spare change right now to pay for trillions of dollars worth of infrastructure outside of the U.S. I mean, I know it's true. This administration does love to send U.S. resources abroad. I mean, just look at what we're doing with Ukraine. But the infrastructure in the United States is crumbling. And I'm not suggesting that it's a good idea for the government here in the U.S. to print up a bunch of money and use it to build infrastructure in the U.S. But I mean, if you're going to spend trillions on infrastructure, it might as well be domestically. It doesn't need to be at, in Saudi Arabia and India. But that's what Biden is proposing here. And it's a clear sign that the Biden administration projects like the Belt and Road Initiative on the part of China as a major threat. Now, at the same time that they're trying to cook up this cockamamie infrastructure project with Saudi Arabia and India and various other G20 countries, Biden kind of capitalizing on Xi's absence in order to do that. You've got the Belt and Road Initiative conference coming up in October, where China says 90 countries have confirmed their attendance. I believe even Vladimir Putin is going to be visiting this Belt and Road Initiative conference that's going to be held next month. And you can expect that project and that conference, there's going to be a lot of talk of de-dollarization. There's going to be a lot of talk of using local currencies to settle trade between these nations of the global south, who many of which have signed on to the Belt and Road Initiative. A lot of Middle Eastern nations are involved heavily in this Belt and Road Initiative, and it was just last year, December, not even a year ago now, that Xi Jinping was visiting all these Gulf states, and he was petitioning them to sell their oil exports and their gas exports denominated in Chinese yuan on the Shanghai Petroleum Exchange. So, expect more discussion of de-dollarization at this Belt and Road Initiative conference. And, the fact that Yellen, the reason I say it is a huge contrarian indicator, because it's obvious that when Janet Yellen tells you not to worry about this stuff, that she's feeling very good about a soft landing and inflation getting under control. It's a clear sign that inflation is about to run absolutely rampant. And she's just trying to do this, let's control inflation expectation game to try to bring down inflation. But, central bankers, Keynesian economists, politicians, modern monetary theorists, they all think that they can control inflation by doing things like managing expectations, and that it's consumers who think prices are going to rise that cause prices to rise, or it's employers who, or business owners who are passing on these costs and being greedy for profits, or it's workers who are greedy for higher wages. No, I mean, the whole reason that inflation is out of control is because the central bank, under the direction of folks like Jerome Powell and Janet Yellen, has been monetizing huge sums of debt for more than a decade. And now they've painted themselves into a corner where it's like you've got a massive recession, a hard landing right around the corner. But unfortunately, inflation is still very high and it's about to get higher. And that is why, inflation is going to run out of control. But again, she's just trying to play damage control here. And then the same thing with China. When she tells us not to worry about China, you got to worry about China. When folks like Janet Yellen tell you not to worry about something, it is time to begin getting prepared. It is not a good sign. It is not a sign that a soft landing is around the corner. No, I mean, she really is a contrarian indicator. And it's very alarming to me to hear her saying something, do what you can to get prepared, folks. Don't buy the hype from the administration and from the mainstream media that inflation is over. Tomorrow, we are going to get the CPI numbers for August. Expect them to be very high. Even the Fed tells us they're forecasting an increase back up to 3.8%. So, 3% was very likely the bottom for the headline CPI. And the Fed now is, I don't know, are they going to have to hike rates more? I mean, there's a pretty good consensus that the next Fed FOMC meeting, they're going to pause the rate hikes, but I think more rate hikes are probably in store. But eventually something's going to break in this over-leveraged economy. We've already got interest rates on the national debt soaring. You've got the highest credit card interest rates on record. You've got credit card debt over $1 trillion. And, remember in October, all those folks with student loans are going to have to start making those payments again. So that's going to put even more pressure on this consumer-driven economy. And I don't know, when Janet Yellen tells me that a soft landing is coming, it makes me think even more strongly that there's not even a possibility of one. So let me know what you think in the comments down below. Are you in Janet Yellen's camp? Are you feeling very good about the prospects of a soft landing for the U.S. economy? Do you think inflation is under control and it's nothing to worry about? Or do you think that we need to be getting prepared? I'd like to know what you have to say, so leave me a comment down below to let me know. Stay safe and happy stacking, everybody. Thanks for watching. I will catch you next time. Smart Silver Stacker, out.